Steinhoff wants to acquire up to a 98% stake in JD Group Limited. Eyal Shevel, he's the head of the corporate sector at GCR. He joins us now for more. Eyal, perhaps this is the perfect time to get your perspective on the deal. Steinhoff wanting to increase its stake in JD Group. Does it make sense for Steinhoff to do this?
I think certainly from Steinhoff's perspective, the deal makes sense. I mean, the JD share price has almost halved over the last couple of months, while Steinhoff has doubled. So it makes this deal very attractive for them. It makes it, on a relative basis, much cheaper to acquire the remaining 30-odd% in JD Group than when they did the original transactions 2 to 3 years ago.
You mentioned that it's a good opportunity because the share price has weakened quite substantially. But Steinhoff will no doubt have to pump more money into JD just to balance out the bad debts within JD's group books.
Yeah, certainly Steinhoff. I mean, JD Group, when they announced their interim results and the large provision they had to make to that debtors book, announced that they would need a 1.5 billion rights offer. From global ratings perspective, as a rating agency, we had indicated that gearing levels had become unsustainably high in JD Group, particularly because of the poor performance, and that we would need to see them reduce gearing by 1.5 to 2.5 billion rand. So that 1.5 billion rights issue will now, I assume, be provided solely by Steinhoff.
From a shareholder perspective, looking at JD and Steinhoff, if this deal does go through, is this a vote of confidence, perhaps, that Steinhoff has a management that commits to a deal?
I think it is a vote of confidence, but I think it's very much in Steinhoff's acquisition philosophies, that Steinhoff is quite happy to acquire a struggling business at the bottom of the market and is patient enough to wait 2 or 3 years till the industry recovers and the business itself recovers. So from that perspective, they're a long-term investor. From JD Group's shareholders' perspective, I think they would be selling their business at a low, but the increased support from JD Group, from Steinhoff, would certainly be positive for JD Group in the long run.
Looking at Steinhoff, they also have furniture operations based in Europe. I understand they're second to IKEA, which is one of the biggest retailers in that particular region, or internationally rather. Will there be lessons perhaps that they can pick up on from the international trade activity and implement into JD from a local perspective? Certainly
there'll be lessons. I'm aware already that Steinhoff has been bringing experts in particular types of retail to help out JD Group stores over the last year or 2 years. So particularly in things like electronics, so the incredible connection in Hi-Fi Corporation stores. They've got a lot of experience in Europe about how the market has been shifting for electronic purchases and that, which they have been already bringing to the JD Group stores. And I think very much JD Group has slowly over the last 2 years been increasingly integrated into the Steinhoff Group. So the senior managers at JD, now the chief financial officer and the new chief operator, are all Steinhoff people.
Well, coming back to looking at JD rather, quite clearly, we saw the retail sales data that was up quite significantly. A bit of a surprise to the market, but we're still going through inflationary pressures. Interest rates might go up. For a company like JD, which operates in the consumer environment, is the outlook fairly negative for the remainder of the year?
I think on the retail side, it's certainly negative. I mean, the JD management are putting a lot of effort into trying to drive some sort of sales growth. And I think that may come in incredible connection in Hi-Fi Corporation, where there's continuous product innovation. But I think the furniture sales will be, at best, flat to perhaps declining slightly through the year. Particularly if they have to, as they've said, that they're going to reduce their debtors book. The more they reduce the debtors book and are not prepared to issue credit, that itself will reduce consumers' ability to buy their products.
Eyal, down to the money question, where's the investment opportunity here?
Well, I think it's a long-term, obviously the only investment opportunity, if this deal goes through, will be in Steinhoff. But I think Steinhoff has shown its strategy, but it's a long-term buyer of what should be quality retail assets, but that these businesses are not necessarily performing 100% at the moment, but it would be more of a long-term investment opportunity. Once the markets do begin to turn, then we'll see Steinhoff with holding as we said, the second largest retailer in Europe and the largest furniture retailer in South Africa.
Any lessons perhaps for the likes of African Bank and African Bank and Eyal Shevel perhaps to learn?
I think the lesson, well, JD Group can learn the same lesson, is that there needs to be increased focus on the retail sales of the business. That businesses like JD Group, where they've fallen short, and Eyal Shevel, is that they focus too much on their banking and financial services side of the business and tended to neglect that retail business. I think with Steinhoff taking it, purchasing out the whole of JD Group, there will be an increased focus again moving to retail and making sure that the retail offering is primary and that credit is just the facilitator of that.
Well, it comes back to what they always say, know what you know, but more importantly, know what you don't know. Eyal, it's been an absolute pleasure speaking to you. That was Eyal Shevel. He's the head of the corporate sector at GCR.